Yo, what's up, guys? We're gonna start here in just a couple minutes.
Yeah. See the street lights. I ain't slapping like 48. I'm back. I'm here and I know they've been waiting for me. Since I was 15, now I'm yellow. 100 miles and running. Easy coming, easy go. That's why I work to midnight. I'm out of town, shirty, very dirty on the turnpike. My pistol clean, I caught a case of habits to the blast. The lawyer said don't smoke. I'm like, good Lord, Buddha, keep me blessed. I'm buying Nike stock when I see these charts. Motivated my niggas because it's bigger than me. I know that. I might go back to my old shit. Bring the throwback. That's a throwback. Yeah. Shit, boy, you try to talk like you know something. My competition is myself, therefore I ain't worried about no one. Not a soul, pot of gold. Looking like a stain, niggas will wet your mug. Leave you behind yourself, you play catch up, boy, that's your blood. Cause I done blew inside my mind since I first wrote a rhyme. You're all late. Rappers be stuck in the booth, I'm all state. They imposters, steak and lobster. Serve my turf at a way of chopper next to Oprah at the opera. Okay. If you had everything you ever want right in front of me, what's it gonna be? Lights or the drugs or the girls finally drives me crazy. Drives me crazy. Drive me crazy. Drive me crazy. Drive me crazy. Gotta love it though they hating on me. I be on Sunset, still go back to 68 to Stony. Cooked out my basement, grab my tape and get my homies placements. I play the keys in my sleep on the beach, that's a dream vacation. Say you ain't heard, I let you lie, just know you dig your grave. No turning back when you done find it, that's the hand you play. Game over on the driving range in a Range Rover, halfway sober with my middle finger up. Fuck these hoes, I'm a tag in the jungle. Middle of the summer with the wood on me and the beat for the snow. White girl, she a beat for the blood, I'm a G to the coat. You know me and Kiki promo, I DLC for that TLP. Keys to the Jeep and the D to the boat. Y'all cruising, y'all losing, I make pop music, still a king with the flow. It's just shit I've been thinking about, Picture everything you ever want right in front of you. Ooh. The lights of the drugs of the girls finally drives me crazy. Drive 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 me
All right. get it. All right, guys, let's dive in. Let's get after it. Yesterday's shakeout setup. Oh, man, it was the setup of the day. So the buys that we were reviewing right over here, right after we cleared out the London lows and we saw price pull up here. Right after we saw the sweep of liquidity here, and we had price immediately leave those lows. I know we were waiting for a little bit more demand in order for make to really have a green light on the buy. The pullback happened a little bit too quickly for my liking, at least to confirm bullish structure. So this pulled back and then just ripped, and then played one more time off of the sell-off until it just, went on its merry way. So here we are, back at it again. I did catch a sell on NQ for like 30 plus points, but ended up break even. So that's about it. That's about everything that goes with how it went yesterday. We've had a really interesting week here so far. With indices, a little bit less action, at least for me, with indices than usual. And then we had our peso trade play out. I know with our oil sell from a couple days ago, some of you got triggered in. I was missed by one pip, and then hit the 2R that we were looking for there, looking to exit the imbalance. And then yesterday we started looking at some metals and seeing some opportunities. So same process is kind of looking like here. So I'm gonna start here with gold, and I want your feedback as well. I want to hear from you guys, because the reason I do these sessions is to obviously just trade live, but I want to help you guys keep getting better at this thing. So our move to the upside that we saw with gold, this is a pretty huge move. You saw it's about 307 pips to the upside. We did see the market start to sell off. So we saw a nice little move down, about 166 pips. And then, we have continued to rally to the upside. And that, for me, I don't see this drop as the exchange of money from buyers to sellers, at least not not on the big move to the upside here. So, because remember, we had multiple things happening here with gold. You have the initial drive to the upside that cleared out, previous highs, rebalanced, and then works its way down. And then we see another batch of buyers coming in before everything came down. And this move here was definitely a little bit shorter. So I do see that we're starting to see an exchange of money here. And the way this has been building up, I think we clear up a little bit higher to get another short. So interested to see how that plays out. And then if we took a look at silver, is there a contract switch? Because it's looking weird. There was a contract switch. Oh, that's my bad. All right, hold on. So remember, guys, as we're looking through these charts, I look at the futures chart. I'll look at CFDs. The futures data is going to be more accurate, since that's where CFD brokers pull their information from. So that's always nice. And yeah, you can apply this to both sides of the spectrum. So Any questions you have, just drop them in the chat regarding like prices, entries, and things like that. Um, Now, higher time frames, we definitely have seen silver pick up more momentum. So, for example, we're looking to short, at least well, I'm looking to short out of Friday, August 8th's price action, this huge pump at, I think it might have been NFP. And then silver is trading well above all of this already. Silver is, getting into price action from July 24th. So higher time frames, silver has been a bit more bullish relative to gold. And then, but in current price action, just, based on day-to-day movement right now, we are starting to see gold pick up a bit more momentum than silver. Either way, I'm down for the get down. So it still looks like it could be a qualified trade for us. All right, so I have alerts set once we get a little bit closer to that. Now, what I also see is I'm curious to see if this sweep down on silver that we just saw with the prior to the news event and then move on up, could this turn into a buy setup? If we see higher demand, if price keeps trading above this previous high, and it's not just a quick pump and dump, but if we actually see more structure here, then I would be more inclined to a buy. But until then, that's not going to be the case. So right now, the market's got to prove themselves. We have to see more out of them. The trade that I do think, I'm sure some of you that traded London pulled the trigger on, this is a good setup, is right here. So we had during yesterday's New York session, nice little sweep down. The market then continued, and during the rest of New York session, we got higher highs, price moved sideways, built up liquidity, and then started dipping into this area during London, maybe even early. Earlier, a couple hours ago. And even if you're waiting for smaller time frame price action to go back bullish, maybe you even pulled the trigger on this pullback here. So I could definitely see some of you taking this position. I wasn't looking at the charts at this point, so I was chilling. But yeah, what are you guys doing there? I feel like there was the trigger pulled on this. Let's see it. And then gotta say what up to the gang in here. What's up, Carlos, Harshi, Amy, what's good, Corey, Michael, Rise and Grind. Hello, Nora, Patrick, Seth, what up, Joe, Mr. Joe, Ryan, Hector, what's up, primo, what up, Gabriel, buenos dias, morning, Karen, shout out to Amsterdam out there, Netherlands, Alonzo, took a buy on gold around 5 a.m. LA time, 1 to 3. See, I knew. All right, got Nancy on the stream. Vaughn, I sent in a chart into the live post. Yeah, I can check it out. Happy blessed Friday, Ma. Tio, Rafael, Lux. Good morning. Sad Friday. No trading tomorrow. Hey, I mean, crypto's always an option, man. It's staying too long in that entry zone for my liking. On what? I caught the small time frame sell and broke even. Okay. These 3-day no trading weekends, I shake my head. Yeah, with Labor Day. Caught a gold trade today. I posted on the school wall. Oh yeah, let me check it out. Looking at potential oil, but a bit lower. Okay. Yeah, I'm about to go check out everything on school. So it's good to see. Paul Song, what's up, my G? Not everything in the Netherlands is Amsterdam. I wasn't referring to you. There's other people from Netherlands in Amsterdam in the chat. but that is true. I've been to Rotterdam. I've been to other cities there. It's not all about you, 8-figure trader. Took a dad buy. What is a dad buy? I need to know what this means. I'm not Gen Z. You're gonna have to explain that one to me. A dad buy, like like you got New Balances on, or what are you talking about? All right. So New York Open's literally now happening. So let's go straight back to indices and let's pull up these charts. Let's go back to back. Let's get some more data over here. Let's get our correlation set up here. Hold on. I'm not entirely in a rush right now with indices because of where we're at price action. What the? Okay, so what can we see already? We're noticing, and I'll zoom out slightly. Now, Dow has not pushed as aggressively as NASDAQ has to the upside. And we saw NQ yesterday cleared, the New York session highs, kept pushing higher, and it traded up to a zone that we had all the way over here from August 19th. So a couple backs, right? A couple days back, so about 10 days or so. And after it did that, we saw a pretty clean pullback. This whole time, we're seeing Dow Jones also revert back to trading out of this sell-off that it had over here. Now, I wasn't necessarily looking to take any buy positions on Dow based on the liquidity that it created right over here. But despite this liquidity, we are starting to see another move to the upside now in today's price action. So what we're seeing is since London session, before news, Dow started to pick up more and more momentum. So we're seeing Dow become more bullish, take stronger positions to the upside. So what can we wait for trades today? What can we wait for positioning today? At the moment, it looks like with NASDAQ moving upwards more slowly than Dow, it does look like we could have better positions for sells with NASDAQ, at least right now. These things, and you guys have seen it happen all the time. Price action can shift, and we can see a shift in momentum on what's carrying price upwards more or less. But right now, it does look like Dow is making moves to the upside a bit more aggressively. So London highs are right here. Let's get this, just make our lives easier. London highs are right here. The difference with this London high, though, with NASDAQ, is that when it goes up, it does clear some liquidity, not a whole bunch, but a little bit here. And then we have the New York high that was at the end of the day. So this is where I think we have the absolute best selling opportunity. So to be patient, I would be waiting for a sell over here on NQ, especially if we're seeing especially if NASDAQ just takes a lot longer, takes more to work up, then that would be the case. The same kind of price action is right here with Dow Jones, where it takes the high and then drops. So I would not be surprised if we get higher above New York highs with Dow. So I'll set this right there as well. So at the moment, we're seeing a bit of a shift in momentum. Now we've seen Dow clear the highs, trade up into the zone, starting lose a little bit of momentum. NASDAQ is doing something similar though. And so, yeah, we'll just kind of wait and see what the market looks like and how price continues to move. Now, let's say we get price to work its way lower here though with like Dow. Let's say right now the market's going to push lower. What I would want to see, do you look for entries after the session highs or lows have been broken through? oftentimes those will give us really good opportunities since you see a lot more liquidity there. So, for example, let's say you're a seller. Let's say you're in NASDAQ, and you sold during London. Where the most stops are psychologically probable to happen is where the previous high is, which doubles down as the London high in this example. And so this is one of the easier anchors for most people to put stops above. And then same thing, let's say you're a buyer. Okay, well, where would most stops go? If you're buying within this consolidation, where would your mind logically put your stop loss? Probably below this London low, if not this New York low. So that's why these are areas where we can see sweeps of liquidity. It's those spikes down or up. Now, if we're looking for buys, though, right, are there buy scenarios here for Dow? And I'm not opposed to what we have going on here. So we've seen some liquidity build up here, moving sideways during London. You saw the market make a nice push to the downside, clearing these lows before rallying, especially with the news event. So I wouldn't be necessarily shocked to see Dow bounce out of this area. I think we could see a nice little play. I'd be more open to buying here. If we see, let's say we see NASDAQ clear London lows, and that lines up with Dow getting to this level, then I like this idea. Now, what I'm going to do is I'm going to pull up ES as well, because I want to see kind of how the market's comparing here. And if we look at ES, so S&P here, S&P, as usual, playing kind of the middle child of the two. Not as bearish as Dow, but also, or it's more bearish than Dow, not as bearish as NASDAQ. So here we have NASDAQ. Look here, for example, NQ is starting to push further down. Looks like it's about to clear these London lows. Just like that, right? NQ building up more aggressive movement here, pushing to the downside. Okay. Meanwhile, Dow is still holding pretty bullish structure. So the opportunity for Dow to rip to the upside is building up, in my opinion, more and more. It's all about finding the right context. So the fact that we could still work our way lower so that we can close out this sell-off and push higher, that makes sense to me. And if we're talking about overall structure, for example, yesterday, let's just compare how price is moving along. But yesterday, here's how we had both right around these lows. So yeah, it's starting to pick up a little bit here. So let me push an alert on Dow so that we can get a bit more prepared for buys if they line up. Now, one thing that's very interesting, and this could create a buy scenario for us with NASDAQ, is that now NASDAQ cleared tons of equal lows during London, the London low, and if we see, and this is a big, very important, do not listen to what I'm saying. If we have price continue to rally with NASDAQ, create more demand up here rather than down here, then we could see the market dip down one more time and go for a buy. So, for example, the initial push down that we saw here first, this lures out retail buyers. So this obviously liquidates. Now, it actually doesn't even matter what I was about to say because this is still going further down. So clearly that it wouldn't have mattered. But had it cleared the low, then come right back up, establish more demand up here, then we could have looked for buys. That's not the case, so we don't do anything right now. So we just wait. All right, so wait up. Now we did just have our gold alert go off, so let's go check that out. That way we don't miss out on any opportunities. So remember our gold idea here. Price is about to reach this zone. So I'm looking to short right here at 34.85. I'm getting there. The stop on gold, I have it at 3,500. So about 150 pip stop. That's what I have mine at. You can, if you want to be the most conservative, you could place it above this previous high right over here at 3506.7, 3507-ish. That would be your most conservative opportunity right there. Yep. All right, we are just a couple pips away from entry. All right. How do you guys feel about gold in general? And remember, trade your game. If you don't see the setup, like don't feel like you need to take it. That, in my opinion, has always been like if you, let's say the trade were to lose, would you be able to take responsibility over the trade? That is always going to be extremely, extremely important. And if you can't, then it's not your trade. Now, if your intention is just to build data, just learn more about your trading, your behaviors in general, then yeah, pull the trigger. All right. So let's see where we go. I am officially in. All right, yep, I'm in there. And so yeah, I like setups. I like to sell around the zone. Willing to take some, some drawdown on this trade. Definitely not too worried about that. If anything, here's where we have some good support in the past. So right around that 34.86, 87-ish. This oftentimes can flip into a good reversal point. So yeah, I feel good about that. Just locked in over here. All right. Cool. Now, the important things are the exits. Where do you take your profit, right? Assuming, let's say if we get into profit, where does that go? Well, we have a couple different options. The most conservative option, which is not the most profitable option, would be to trade into this imbalance. Now, a 1R is definitely not my that's not my typical exit by any means. But you also want to consider probabilities, right? You're not here to just trade and hope that things go in your favor. You're trading for the sake of having it be worth your money. So 1 to 1R, those are obviously higher probability exits, but not necessarily what I go for. Into today with the volatility that we have and what we've seen in the past, trading in these levels, we've seen that there's a pretty reoccurring theme of the market within one trading day giving us a couple hundred pips when we're trading around here. So last time we saw a move, which was a couple Fridays ago, we did see about 600 pips of a drop from the zone. So let's say we happen to time it well enough. Could we see a pretty massive movement just like that? And if that were the case, then that would bring us maybe into this imbalance over here. So can we clear these lows and trade into this imbalance? That would then give us around a 3R. So this is not, you're not trading hope. You're just trading what makes sense. And we've seen it time and time again. For example, here in July, when we sold out of this range, the rest of the day led to the market trading right around 34.50 as well. So if we wanted to say, and obviously you can read this based off of price action and just kind of wait for the market to drop. But time and time again, we see it's not unusual. It's actually more common that these are just very volatile areas. And we could see the market trade, let's say at least at 34.55, 34.50. So we'll see. The last few times we've seen the market kind of slow down around that lunch time, a couple hours before close. So keep in mind with the same thing here as well. So yeah, we'll see. We'll see how it goes. Right now we're, 15 pips in profit or something. Nothing too crazy. So aquí ya, chicos, estamos adentro de las ventas con oro. Unos 15 pips en ganancias. Nada tanto que decir, pero algo es algo, ¿verdad? Okay. So with that being said, all right, we'll see this thing through. All right, so that's, doing its thing. We can move on, analyze what else is going on. Okay, perfect. So check this out. Now, okay, there's only so much we can do all at once. NASDAQ has officially mitigated the zone that we had over here from yesterday. If you had a pending or you just happened to take this for some reason while we were doing gold stuff, then definitely start to at least reduce your risk. If not, go break even. I know we had this marked up from yesterday. And we're in the similar market conditions as yesterday where the markets are moving in opposite directions, but then they are they're inverted correlated and then they're correlated again. It gets pretty choppy. And from what I'm noticing is S&P actually tends to move a bit, like the key levels on S&P actually end up playing out pretty nice when Dow and NASDAQ are kind of all over the place. So I wouldn't be surprised if we get a pretty clean buy scenario with ES down here. This was Wednesday, nice little push down before the market rallied. So I wouldn't be entirely shocked if we do get a nice buy setup here. At the moment, what we're seeing is S&P or Dow Jones dropping further. We're noticing ES, the NASDAQ keep pushing down. So it kind of looks like everything is getting back on the same page, where everything is finally looking a little bit more bearish, working its way lower. So we could see NASDAQ finally get down to this area, similar to what we have here with S&P. But since NASDAQ and Dow are kind of all over the place, it looks like this level down here, because this is where we traded out of yesterday for Dow. So if you look back, Dow Jones yesterday, traded all the way down to even create a bit of liquidity and then rallied. Today, obviously, it started the day off a lot more bullish. And meanwhile, NASDAQ is pushing a lot more aggressively to the downside. So I do think we're going to get a little bit lower. But I also think that ES is going to take a bit more down as well. So my prediction, what I would believe can happen today, is we actually break below this. Maybe we get a little bounce, but then we go lower into this imbalance, and then we run, which would set up S&P to play out of this zone here and then make its move. So then we could see something like this. So this is kind of this is my take on how we could see indices play out so far, melting away. Quite the move. London lows swept already. if we're going to keep pushing, I don't think we're going to hold this New York low. I don't see why we would if there's a clean example for mitigation right here as well. So, unusual, out of the ordinary, ES sell for me here coming up. Or buy, ES buy, my bad. Let me not confuse anybody. But only if it gets down to that level. All right, needed to get down there first. Otherwise, got no business. Now, contracts wise, if you're trading futures, you want to make sure you have the right contracts set up and ready to roll. You don't want to over leverage, play around with the wrong contract sizes. So for me with ES, I'm taking about 7 contracts for the long. But obviously I need this to drop a little bit more. So let's see this clear this low first. All right. Meanwhile, gold is still kind of hovering around our entry level. Oh, guys, wanted to give y'all a quick shout out. Got to give it back to the community. Y'all blew up my video. The FTMO is back video. You guys blew that thing up. Goddamn. Y'all went crazy. I think we cracked like 5,000 views on it. So sick. Appreciate the love, the comments. Y'all, doing your thing in there. So always appreciate you guys. I know some of you have been trading with me for like 5, 6, 7 years through different platforms and stuff. So yeah, appreciate you guys. Clearly there is demand for more insight on prop firm trading, or just the good, the bad, and the ugly. So yeah, much love, guys. All right, so we're seeing a huge drop here. Market ate this thing up. I'm not necessarily I'm not looking to make any new decisions quite yet. Gonna let the market give us enough context, which is really important, guys. Don't let your mind start to just fill in the hole that isn't there, right? Don't let your assumptions start getting the best out of your trading. So look at this. Now Dow is pushing way more aggressively. Guys, does this look like it's bullish? or does this look like it's melting through and it's definitely not worth taking a buy here anymore? So let's look at the price action. Like just look at how this is just bleeding out. Dow is just collapsing into this area, whereas NQ is now starting to pick up more momentum to the upside. So if anything, and I'm sure you guys are seeing this, it looks like we saw Dow take out the Asian highs. I'm not going to buy here. Maybe it plays out, maybe it doesn't. It doesn't matter to me. The fact that we're pushing so aggressively to the downside now with Dow, and we're seeing NASDAQ actually flip structure, or flip to more of a bull here, it makes a huge difference. So we did get a nice bounce. Either way, it wouldn't have triggered me. I had a lower entry. So this has mitigated. If you did take a trade on Dow, my suggestion would be to move stops to break even. I wouldn't force this trade anymore. But what looks more promising, depending on how this continues to rally, but the short out of here looks like it has potential with Dow. And why? Look at how we see Dow go on an absolute tear. The market pumps 88 points, clears out all sellers that got in the last, give or take, 12 and a half hours, 13 hours or so. So we see an aggressive move. Takes that out, instantly drops. So once we're starting to see more demand down here, which it seems like we're starting to get more and more price. If price keeps this up, then I'm definitely looking for shorts on Dow over here and upwards of this area. Ideally, the market stays bearish for this to qualify. Otherwise, it gets a little trickier, right? So that's what Dow is looking like. To refresh a little bit on what's happening with NASDAQ. NASDAQ here, what did we see? All right, we saw the market clear these lows. So we saw the New York low get swept, traded into taking out yesterday's London lows, and trading into these just Asian session imbalances. Now, as quickly as we saw the market go down, it came flying back up, but we don't really get too much demand up here. As soon as it goes up, it just goes right back down. So, like I mentioned earlier, there's no rush. There's no rush. Don't trade what you feel. Trade what the market gives you. So, we're seeing S&P push down again. Oh, look at that. So, starting to get lower here. All right. NASDAQ almost at that level that we have here. There it is. ES just trailing behind. So I am interested in taking a buy on S&P here soon. Almost there. So just a little more, and I'm willing to pull the trigger on S&P, which is a little bit more rare for me. I'm usually trading NASDAQ or Dow, but I'm loyal to the setups, man. I'm loyal to the system. So that's what we're going to do. Right now, ES is dragging a little bit behind. So these are some of the... Sometimes you'll see, like, for example, since NASDAQ gets here first, these are the setups where we can see it briefly break the structure, briefly break the low, and then run. Only because, it's like a game of chess. Like, S&P also has to get down here. All right, so pretty close. This just tapped into the zone. Just tapped in where we had lows before. I do think we'll break a little bit one more time because this is now creating liquidity by just tapping that low. It didn't get into the imbalance. I think we'll see one more spike in there. So just about ready. I know the patience and all that bullshit, right? It's like, oh my God, let me just get in the market. Guys, I know the feeling. I believe in you. I believe in your patience. And as always, right, there's a chance that it just doesn't happen the way you wanted it to. So this just tapped the zone, and we're starting to get a bounce. Here's where the FOMO kicks in, where now we're starting to see the market reject the zone already. And it's like, damn it, should I have gotten in, right? That's the initial feeling that we start to get. Like, should I have been in the market? Did I make the wrong choice? I get it. I totally get it. And you got to stick to whatever your plan is. And you also remember there's always going to be more trades. So weren't able to pull the trigger. My just reminder is that there's going to be plenty of other opportunities. I will say, unfortunately now, at least based on what I'm seeing here, this is about a 29-point drop, and it looks like we've basically hit that already on the mitigation here. This pains me, but yeah, it looks like we basically already got it. Now, only way I pull the trigger is if we do see S&P work our way down one more time here to make the move. We just haven't gotten into the imbalance, so I do think it's still a possibility. and then that way we can mitigate, and then this trade can run. So I'm still open to this idea. And then let's see if we look back at Dow Jones. Dow is still creating liquidity too. And I think we could see this work its way down. Oh, there it is. It tapped into with S&P. Was anyone able to pull the trigger there? It just tapped into here. Now this thing can run. So we saw the move down about 6 points. And then we saw this thing instantly pump from this area. See how it pushed down and then just ran? Yeah. Okay. What a move. So, yeah, great movement so far. Good bounce. When it spiked down to here, I guess I had my entry a little bit higher. So it just tagged me in. If it didn't for you, valid. I get it. It was a quick, annoying little pump. We saw NASDAQ push down one more time. That extra spike down as well. And then from here, it's starting to make a move. So what are high probability exits for indices right now? Let's say whether you took ES or NASDAQ or whatever. Trading into this low right here, to me, looks like it could be a high probability exit if you're looking to be more conservative. Trading into that London low still gives over a 2R. So I could see that playing out nicely. Other than that, from there, I think the next target would be where we saw a little bit more liquidity and where we had this order block. You could definitely see some reversals out of these levels as well. Based on the way that this reacted, though, setting stops below this low or at entry seemed pretty reasonable to me. If you took NASDAQ, same thing goes. We clearly saw money come into the market, the exchange from selling to buying here. So to force another, to just marry the trade doesn't make sense. Money's already coming into the market, so I wouldn't really necessarily force it here. Unfortunately, what's looking, well, at least, we just don't really know, but there's definitely drawdown in our gold trade. If you have your stops up here, obviously you feel a bit more comfortable. If you have your stops right over here, then, we're about 70 pips out still from being stopped out. So, yeah, we'll see how it goes. One thing that I am noticing so far, though, is we're now starting to see Dow push a little bit lower. That's kind of slowing down S&P's progress here. So I'm curious to see where exactly Dow wants to go with this move, because that's definitely influencing S&P's to trade out of the zone right away. That's the only downside to trading S&P, is that it basically always is moving. So it averages like Dow and NASDAQ's movement. So, like I mentioned, you might be already break even with this trade, or maybe a reduced stop just based on the way that it's moving. I do think that these could hold up, but yeah, I wouldn't necessarily force any trades out of here. The other perspective that I could see play out for the market is for it to just play in this imbalance, whether it's going to be Dow or whether it's going to be NASDAQ or ES. But yeah, so this is a break-even trade on my end. Guys, I wouldn't force it. Don't push this too far. I don't think that's gonna be worth it, in my opinion. Just let the market give us the opportunity. So since we got a good bounce, so now let's take a fresh perspective at this, right? So we already had the mitigation here. Great. Clearly, we're not seeing an exchange of money. I do definitely think we can still see a reversal. So, all right, break even on this here. But now we still have this huge sell-off. Right, here's where we saw a market. This was NVIDIA earnings. So I still think we get a bounce out of this zone. Right now, NASDAQ and S&P are very, very similar in the way that they're moving. So I'm looking to take a long position here. The question is, which one? And we're seeing NASDAQ below the 886. We're seeing S&P here. Way over here. All right. And now we're seeing Dow trading at these lows. So, guys, I'm pulling the trigger. I'm pulling the trigger on ES to give us a good position here. So S&P longs from where we're at right now. All right, so here is the entry. Basically got it right there. You have a huge sell-off, takes out liquidity. We establish bullish structure, and then now let's see if it holds on. Considering that we're already efficient and we've mitigated over here in the past, I do think there's a pretty good opportunity here. And since S&P is dropping the least aggressively, that's why I feel pretty good about a long position over here. You know, Dow was already trading below these lows. We have different levels, honestly, with Dow Jones to bounce from. But, yeah, we'll see. Let's see what happens. Meanwhile, we have also, where are we at? NASDAQ got all the way down. So let's see if we get a good bounce out of this zone. Remember, just manage your risk properly. Don't go crazy over here. Just do the right thing. Okay. Now, first exit with a trade like this would be where we saw the market here struggle to go. So, for example, right where we just stalled out right now, where we got that mitigation, this is the first area where you can get a pretty good exit. If you're willing to go under a 2R, then there's a very high probability chance if we get the bounce that we go at least 1.5R. Obviously, not everyone's favorite by any means. And 2R still I think is likely. Now, if we break through this, and that's again big if, huge if, then the next target would be in the imbalance way up here, going beyond a 3R. Right? So I'm willing to pull the trigger. Well, I already pulled the trigger. My entry, you guys see my entry right around here. And then we'll see. Gotta be willing to take the shot on the setups. So right now we're still pushing down, not getting the move that I would have obviously liked right away. But we'll see. Now, here's something to think about, right? When you're trading and you're getting aggressive movement, we're seeing the volatility that we're seeing. Common theme is, you don't want to catch a falling knife, right? That's, you just hear that all the time. But what does that mean? And what is your motive behind entering the markets? Is it for the sake of, is it a system? Is it a pattern? Is it context? Just everyone has a different perspective on why to get in. Now, in my case, I'm looking to get in based off of how I perceive where smart money comes in and where smart money has to go. Or not has to, but should go. And so, for example, if we take a look at how the market sold off here, and we look at, for example, this is NVIDIA and how it influenced the market with its earnings. So we saw the sell-off happen straight from here. Just sold off from this was huge. 45, 46 points. We could even go to the 15-second time frame. And, sure, we can have it drop from here then. And then let's say it bounced over here. Okay, and then you see one more drop. So worst case, a 16-point sell-off for the market to push higher. So what does that do for us here? So if it was at least a 16-point sell-off, then I'm willing for us to see at least a 16-point move to the upside over here, which would then take us to where we had the order block over here and all that good stuff. So pretty good deal. Now, what are we seeing? Look at this. Dow gave the mitigation out of this zone. So we already saw the bounce. Let's look at this. Came into the zone, did about a 40-point move. So the market already exchanged hands from sellers from the past to buyers in the present. So if S&P is going to ride, it could ride the momentum that Dow's looking to go in right now, which is already clearing out yesterday's New York low, playing into Wednesday's New York Open. So we just might see this thing run from here. Now, what's not moving on up, it looks like, is NASDAQ. NASDAQ kind of struggling, which is why it's slowing down ES's progression towards the upside as well. Did any of you guys take the Dow long from over here by any chance? Curious to hear if that was the case. Well, let me check out the chat. All right, what's good, chat? Stopped out of NAS. Okay, so yeah, I would say the reason that you got stopped out of NAS, it's way more aggressive. Like NASDAQ has the most bearish momentum, so any longs on there is gonna make it's gonna be a challenge. And it's probably going to break the low. Yeah, like we just saw, it's going to crack that low. That's what I kind of expected it to do. That's why I didn't take anything with NASDAQ so far. So, okay, for those of you that traded YM on the drop, nice. With this trade, if you did take Dow, then I would adjust my stop at least to reduce risk, if not to break even at this point. Look at how nicely price action is starting to form. So, yeah, definitely tighten up a little bit. Even trust me, like saving yourself 10 points goes a long way. Why he put lines on session highs and lows? So the session highs and lows helps you also see another version of liquidity. So the high and the low of a lot of these sessions, people use that to place their stops. So when we see the market clear out some of those levels, it can position us to have better entries or to just avoid taking high probability losses. Okay, so our S&P trade is in profit now. Like I said, NASDAQ was more than likely going to clear that low first before it decided to make its move. That's exactly what we saw. Beautiful. So we did obviously stay out of NASDAQ, and we decided to roll with S&P. This is keeping us away from getting stopped out. And then now we'll see if we're going to eat this sell-off up, and if this is just a massive liquidity capture. I cut my stop loss by 5 points. I forgot about spreads, so my entry was a bit higher. Stop loss hit on gold. All right, let's see here. Yeah, so if you have gold stops for at the top, you're still holding on to this. If you set your stops here above this high right there, then yeah, then you might have gotten tagged out of gold sells right now. So it depends on where you have your stop. If you played it more aggressive, if you played it just like the typical structure. All right, so unfortunately, this bounce that we saw on S&P and on NASDAQ looks like it's a little short-lived so far. So we're not out of the clear yet. Dow also dipping down after a nice little bounce. Look at that, pushing right down to this level. So not out of the clear yet. But like I said, if you were taking Dow intentionally, right, I said, look, tighten up your stop at least so that worst case you can protect your capital. Even these little, couple points, like it makes a massive difference. It makes a huge difference because they add up. Think about how many trades, instead of losing 1%, you lose 0.8, or instead of losing 0.5%, you lose 0.4, 0.3, 0.35. Like they build up over time, especially if you're taking 15, 20 trades a month, 30 trades a month, depending on your frequency. You'll start saving yourself some money. Generational debt on gold. Yeah, that's crazy. All right, so yeah, if indices crashing, I'm sure crypto's probably having a field day right now. Let's see if the overall bias on this stays with gold. If it ends up dropping, silver taking out these highs now, I wonder if that'll allow, because this basically clears out any sellers. So if now the market's gonna wanna dip down. All right, getting another bounce. Cool. What we haven't looked at so far today has been majors, right? We haven't taken a look at majors whatsoever. We still have Australian sells up here. Now, the issue is relative. Oh, we had the pound. I didn't have an alert on this, I guess. But remember how yesterday or Wednesday, London session, we saw the market dip down and then push higher? So selling Australian here, there's definitely some downsides to taking a position here because Australian has been way more bullish than the pound, way more bullish than CAD, more bullish than Euro, more bullish than the yen, more bullish than NZD, more bullish than the franc. So the one that's probably the least likely to play out for a short is S&P, is Australian. So I am keeping it chill, dialing in here before making any plays here. The buys, so we saw, for example, here is where we saw with Australian the market sell off to clear liquidity, lure in sell stops, and then the market quickly gave us a shift in momentum. So the intention behind a drop like this was definitely not to make lower lows to establish bear structure. It was just to incentivize sellers to liquidate buyers. That's why the buy here I like. I like the buy here. The pound yesterday came, or just a couple hours ago, came down to this level. Either way, got here really before any other ideas. Like Euro still could work its way down there. The yen trading much higher. So the probabilities that the dollar gains some strength and works its way still lower are definitely there. So despite the pound bouncing out of the zone, it's probably what I would least want to take. All right. So indices right now, NASDAQ cleared below the lows. Easy for it to take out NVIDIA buyers. So after the earnings report, after they started to push and rip like this, it's like, did anyone expect it to get back down here? No, people think that they're safe. And that's why I give us correlations. That's why I give us the divergence between these, because just because like structure itself is a good tool on direction, but it's not bulletproof on where your stops are going to go. So that's why we kept it in mind with how S&P was moving. Because think about it. Could have gotten stopped. If you would have taken NAS, you get stopped out. If you would have taken Dow, you get stopped out. Both of them. This is one of the rare instances where taking S&P positioned us to stay in the game. What'd you say, Corey? So glad gold took me out so it can drop for you guys. Corey, the sacrificial lamb. Everyone thank Corey for liquidity. Well, I'm saying for Dow, it would have stopped out if you were taking the higher entries. Not this current one. This current one made sense. But I'm saying, like, if you would have taken between the New York lows, like that one, you would have been stopped out. This one here, yeah, you had a chance to stay in the game with this one. And it's playing out smoothly. Right now, we're not quite at a 1-to-1 yet by any means, but we're working our way up. We're starting to see the imbalance getting filled here. On the way up here. That's good. First exit, high probability exit, which is not going to be anyone's favorite risk reward, but the first high probability exit would be to take the 1.4R right here, probably closer to 1.5. If your goal is, if your win rate allows you to have 1.5R as a profitable exit strategy, then it's not a bad place. If you have conviction that the intention behind this kind of move is solely to like the beginning of New York session was just a massive liquidity exit, and then it's going to rip, then now we're talking about something entirely different, and we can see the market come back into at least into this area over here. So let's zoom out and let's consider, let's weigh the options. What are the chances that was all the drop that we needed to see? So if we were to zoom out and take a look at the market overall, could that be the case? Now, if I'm looking at just S&P, the market is extremely efficient. We don't have imbalances, pending mitigations. Like everything is very, very effective over here. Dow, on the other hand, does have an imbalance here and down here that it could get to. Okay. NASDAQ has cleared out lows over here. Cleared out this low, played into here. So we have the low right there. This is not quite the equal lows, but just a point or two higher. But outside of that, NASDAQ is again now pretty efficient. And we when we did trade above this previous high, we held structure throughout New York session going into London session. So about 16 hours worth of price up here. So for this to be the low, for S&P and then for the market to continue higher. Actually, I think there's a pretty decent chance. There's a decent chance that what we're seeing right now is the low of the day, especially considering how much liquidity has now been obliterated from the market and how efficient, rebalanced, mitigated the whole thing is. I think there's a pretty good chance. Risk reward there looks good for the market to continue to push higher. So I understand a hold. Was able to get into NAS, went break even already. Cool, nice, good stuff, Bobby. Good to see you here, man. What was your? How did you position yourself into Nasdaq? Was it after you took out the low? Did you have a wider stop? What were you looking at to place that? So at this point, now with S&P, and also another main reason why I think, at least for now, I'm gonna continue to hold, is I just don't think we've mitigated. Like this sell-off that we got with that was triggered by, the excuse was the Nvidia earnings. It was a pretty massive sell. So for us to bounce, I mean, I think it's pretty likely for us to bounce the way that similar in fashion in which we sold off, for us to get a move to the upside. I still think there's a pretty good chance that we get that. Now you're seeing 1 minute imbalance fill. You're going to see the same thing happening here with S&P. Nasdaq slightly more bullish than ES at the moment. And this shift in price action is now going to be pretty important. So, is it worth taking does Nasdaq buy from here, which I think is definitely the possibility from where we're at now. So we're getting the rebalance. If it just eats this thing up again, very good sign. This sell-off here, rebalance. If we get right back up, then we're seeing more confirmation that there's little demand at these levels now, and that price wants to go higher. And it looks like that's the case. YM fighting for its life. And Q's pushing. So interesting. And the more time you spend understanding and observing price action like this, like the easier it kind of gets to perceive momentum. Okay. So, asked about oil, right? That's what you're asking about? Oil. So, yeah, the shorts from the other day, we talked about that. Still waiting on this long. This is going to take a little bit longer. How do we make gold go down a bit? Yo, Greg, you kill me, bro. I just got to make a couple calls, man. Let me just call Mr. Powell, see what we can do. Peso remains the same from yesterday. We're still in like this consolidated market, squeezing between both buys and sells. So I'm still open to either or. Not sure which one we get first at this point. It's a little... I'm just going to have to keep waiting on this. But I have alerts set on both. Actually, I don't have one here. Mr. Powell? Sir? Yeah, send me the dip. All right, here we go. Nice. All right. Making the move. On the rise. Tell them to pump S&P real quick. Yeah, I got to cash in a favor. Yeah, Jerome. Remember, summer of 93. You owe me one. All right. Oh, yeah, he said he's on it. Yeah, he said he's on it. He said, "Be patient, young Padawan." All right, let me look at all of the charts. I know you guys are sending some charts in here. All right, so could see shorts out of this zone on NQ. Yeah, we didn't even get a chance at getting up there first. I would have being able to short would have been great. Dow didn't want to give us the chance. We weren't able to get up there before we could sell off. But on the bright side, and here's, I don't know if I'm going to consider this a mitigation or not because it was very quick, but we did just bleed the fuck out from here. Like once the market kind of just tapped into here, it just died. So I'm curious whether or not this mitigated, but what could create a selling opportunity for Dow later is this move that we had once it took out the Tokyo highs here. So once we cleared out this trend line liquidity and we cleared out the highs of Asian and London session, there are selling opportunities here with Dow. Could see some action over here. Maybe some end of day type of moves over here. And then where exactly? We've seen some good reversals out of this 45, 645-ish area. Pretty key levels. If you want to go even higher, the other areas I see for some sell-offs would be 45, 669, 668. But at the moment, we'll consider that one if we get there. Just prove that Mike moved the market. He just picks up the phone. Yeah, that's my edge. That's actually my edge. It's just a couple phone calls. We haven't even got the sneeze. Yeah, no sneeze today. No lucky sneeze. Okay, so what do we got? Oh, okay. I see we have two here. Distro. Says, before the shape, there was only wicks confirming the buyers aren't willing to battle for demand in these areas. On the flip side, could see longs out of the lower zone would be more conservative exit, as I'm expecting us to reverse off of the last point of supply with Wyckoff distribution schematic number 2. This is basically what we just did, right? Here. Taking out to here. Yeah, I see your philosophy right now, for sure. I say we wait it out. Yeah, there was a mix-up on our conversation regarding gold, but he said he'll get back on it. All right, Dow ripping. Yo, hey, let me see some W's. For those of you, I know we have some of you guys are in Dow buys. Probably got like 90 points on that right now. First exit, conservative exit would be right up in here. So if you're holding on to that, well done. ES, our stop was, I think it was about 7 points. So right now we're sitting at around a 1R. I know, not super exciting. Dow going significantly better. If you had a better entry than me on ES, which knowing you guys, I know y'all did. Then, yeah, you could be seeing somewhere around 2R, 1 to 2R. Now, this is also why this short doesn't make sense, is the fact that Dow is ripping significantly faster than ES and NQ. Now, remember, NASDAQ has been the most bearish on the day, so it has the least amount of momentum. And then, S&P, just middle child, per usual. All right, good W's. Look at that. Chat's winning. I love it. All right, so crypto-wise, I mean, it's eating the drop back up here. At least Sol is. ETH working its way down into the 4,300s. Has some liquidity, and we still have this area over here. So I do think we might see a bit more bearish price action out of ETH. Bitcoin slipping under 110. Now, there's way more significant price action with Bitcoin here overall. And this just tapped into, oh no, I actually got close, but not quite, into these lows. So take a look at that here. Getting into this traffic. I think actually already played out of this for me. Yes, it did. Okay. So, crypto still relatively bearish. However, there's one key detail here. And that is if we're going to see is Bitcoin's intention with the sell-off right now kind of similar to what we just saw with indices, like what we saw with NASDAQ, where it clears the low, but is it only getting below in order to clear buyers, right? Because, for example, the market's been over here since Monday. So stops, this is the low of the week. Now, Bitcoin sweeps this liquidity. If it runs and then stays bullish, then we might see something like this, right? And then market can run a little bit more. So something like this is a possibility. We just want to let it do its thing. So that is an option. This is an option. Now, if you want to get a better take on crypto in general, my preferred way to view crypto is not through Bitcoin or any other ones. It's actually through the market caps. And with the market caps, take a look at this. This considers the entire market. Well. We are in a mitigation zone on total market cap with crypto here. So getting a bounce out of this zone, it's according to the plan. 100% according to the plan. And if it eats this up and we don't keep trading down here and we get above 3.73 trillion again, then I would be a little bit less concerned about this pump up and drop that we got. So if we do come back up to here, then yeah, we're looking pretty solid. Good thing I took S&P with you, because on CFD I would have been stopped out on. Nice. Good stuff, guys. Okay. So yeah, that's total market cap, including Bitcoin. If you take out Bitcoin from the equation, ETH, this is just ETH. Great setup on Monday. And then we just came back, took out some lows, running again. If we take out ETH and Bitcoin, the alts, guys, the alts are holding up much better. The alt market is starting to hold significantly better. This is typically a good perspective on for, the coveted altcoin season. So yeah, let's see what this looks like. Let's see how things evolve here. Okay. So now we're rallying. In terms of trade management, having your stop with S&P, like I mentioned, save yourself some money. At least move yourself up a couple points. maybe even to this low. We do have, it looks like equal lows here, so every once in a while you might see a little poke into there. That's possible, rare but possible. So if you wanted to just keep it here, cool. If you did take your entry somewhere in this area, there is a chance that it wants to poke down into an imbalance and then run. But it's really up to your preference. What are we seeing now? Look, Dow now is in this last move up before it dropped. So we could start to see this stall out a little bit. We do have S&P that can definitely keep moving a bit higher. So let's see if that's the case. NASDAQ already at this area as well. So this is where, like I mentioned earlier, we could see some rejections. It would be expected to see the market slow down here. Doesn't mean it has to stop completely and fully reverse. It just proves that, there's just a bigger position here. So if you are more of a conservative trader with your exits, then this area here is where we're just shy of it, but where you could start to see your first exit, if that makes sense. Pyth jumped yesterday on the news it was working with the government. Yeah, huge move on Pyth. I think what I saw was that they're putting the GDP on Pyth blockchain. Epic. Absolutely epic. Guys, if you're new to, actually, let me know in the chat who's here for like the first time. Who's here for the first time and you're like, oh shit, like this is cool. Let me know. Let me know in the chat if this is your first time. Welcome to trading here live with us. If you are newer and you want to take advantage of the abundance of resources that we have available for free, for the free ski, then check out the community. Scan this code on the left. On the left there. Me, Edwin. So scan that code on the left. That'll get you access to everything. We have tons of boot camps in there. Psychology, smart money systems, how to build out your entire trading system. Just a whole bunch of stuff in there. So check that out. And then for those of you that you want more hands-on work, 1-year program for very committed, serious traders, then scan the code on the right. Remember, we are doing an FTMO account giveaway for everyone that does join the 1-year program. So if you get accepted, we do deny people just based on kind of where you're at in your journey. So it's worth having the call, but we want to keep everyone on the right path. And I've been doing this for 10 years, and if you're not in the right place financially either, it's not going to help you. If it's going to just be something that becomes more stressful than useful. So yeah, just check it out. I'm new. I just risked my entire account. Dang. Harshy. Well, hopefully you risk the whole thing on S&P. If you risk your whole account. Yeah, you killed me. I feel like a rookie. It's okay, Edwin. Me too. Lambo lot at S&P. Sick. So as expected, guys, we're seeing a little bit of rejection out of the push to the upside before it tanked. Pretty typical. Based on the way that we worked our way higher here and based off of where we played out of, I'm not too concerned. But regardless of being concerned or not, don't let your trade turn into a full-blown loss, because one, we just don't have any control, right? We have zero control. Nothing is known. Nothing is known. I pissed away profits on gold. Sounds so serious. It's a -1 worst case, it's gonna be all right, man. You're gonna be okay. So yeah, cool. Good to see. I'm sure. I don't know if hopefully this is something to learn from. Is just understanding, where market can see big rejections like what we're seeing right now. This, like I mentioned, was to be expected. I could see the market trading into this imbalance. From here is where we're going to see confirmation whether we keep pushing higher or not. Does this stay? Or is this going to get eaten up again just like we saw earlier? So looking at Dow, looking at NASDAQ, it's trading right back into imbalance one more time. So when you're familiar with imbalances, mitigations, order blocks, you could expect reversals like that. So we had NASDAQ and we had Dow play into that last move up. From here, we'll see if the intention behind this drop is to hold off or not. NASDAQ came in. So if this comes right back up within the next couple minutes, then I feel still pretty solid about the continuation. If not, if we stay kind of just chilling down here, then a manual exit might be in place. So now we'll see. But reduced stops definitely in play. Okay, here we go again. What's up, Rod? Thanks for sharing those charts, Michael. Gabriel, Seth, what up, what up? Okay, here we go. Harshi. Hello, Jonah. This hurt this morning, missed my entry by less than a pip. That's been the story lately. Ouch. That's rough. Yeah, that one's rough. Which is on oil. What are your thoughts on oil sweeps low, creates good structure, but it chops up down a lot before it creates an imbalance? Let's see here. No, that's fine. This is basically what a shakeout would look like. So it sweeps liquidity, and then it lures in break and retest sellers. So that's why there's more and more money comes in. And then once there's the buildup of sellers is why this can go up so much. Now we're down bad, folks. Rip. Just rip. All right. Dow imbalance effectively filled. This here is a good sign. The way in which it fills it makes all the difference. You start seeing this thing run, that's a good sign. But remember, ask yourself right now, if the market were to keep going down, what do you do? Are you going to move your stops? Because that's only going to expose you to more risk. Why? Why would you have to stay in this trade? Is it just because you want to feel good? Is it because your ego, your pride is hurt? All right. So we need to be real with, have we fully accepted the loss? Have you fully accepted not being completely right? Is that okay? Of course it's fine. And you got to think bigger picture. Is losing -1R, -2R, is that on today? Can you come back from that? Of course you can. The problem is, in real time, the intensity of the emotion sometimes feels so devastating because you were in profit, but now you're not. You didn't take profit in the order block. And so then there's the I should have, I could have, I would have. And that's not the case. So today's trade, We saw the exit into here. It gave the best probability exit. That was the case. Based on the way the market came down as quickly, it was a sign that the market is still bearish. And our trade here, as we mentioned, had a best case scenario of working its way down to up to that level of rejection. Unfortunately for S&P, at least, this is still, I think, came straight to equal lows. For my case, another break-even trade. For for Dow, it's building up liquidity, so either way, it doesn't even seem like it's that great of a setup. The sell over here looks good, and it looks like the targets now over here, we could get a decent position out of either a move up down here or a move down here. And then if we zoom out, now we take a look at NASDAQ. What do we see? NQ here holding in. And it looks like maybe we target this liquidity down here. So that's all it was. What you don't want is you don't want to let one trade take more than it needs to. All right, that's my perspective. So would have loved for us to, be able to ride this one out into the sunset. Not the case so far. Yeah, maybe Dow holds on, but at least with S&P, we have now finally cleared the low over here, playing down into this zone that we had from earlier in the week. Cleared this low. This was now the NVIDIA earnings. So now we're getting down into this level. So now successfully it's gotten below there across the board with the market. From here, I think the other place we could see maybe we get a reversal out of there. But the highest probability setups now would be longing any sort of Dow trade. Look at what's going on here. Look at where Dow is. Look at where NASDAQ is. All right, NASDAQ's breaking below. And then Dow, just like that, trading right into that zone. So there's two more zones. Now, remember, each one of these has given great mitigations, so it's bounced nicely. It's just a matter of managing your trade so that even if it does bounce, you actually take either a reduced loss or you go break even or maybe into profits. But the problem is, especially if you're taking multiple trades in a day, is that you refuse to lose because you want to, for whatever reason, like you have to be right on that exact moment. And so with a trade like this, it's not working out. You know what I mean? So just like this one, this can play out right now, could reject really nicely, and then make its move. So, for example, this sell-off is 40 points. So the market already mitigated this. So if you took a buy here, cool, stop to the entry. If it drops again, you don't just keep taking shots. Okay, wait till the next zone. Right now, this is already sitting at a 1R. And more. So Dow, again, showing it's more bullish than the rest of them. Let's say you missed this idea. You go, oh, dude, I missed it. Wasn't able to get in. Okay. Do you get in now? No. Chill the fuck out. What can we see here? If we see price, establish some sort of demand, we stay bullish, blah blah blah, then cool. We can have an entry here. That could be the case. But just let the market come to you. Let it give you enough detail. Remember, you don't prove yourself to the market. The market has to prove itself to you. The market has to meet your standards, not the other way around. That's it. All right. So at this point, we've been at here almost 2 hours. Hopefully you picked up on some lessons on how to cut your, how to take your profits, how to manage your stops, how to not get too attached to what you want out of the market, but just what the market is giving you. With ES, there was plenty of opportunity to reduce risk, go break even based on your entries, and go from there. So, yeah, give it a chance. I think Dow may, depending on how this continues, we might see a long out of here. There may be a buying scenario over here. The longer we stay bullish, the better it's going to be for a trade like this. If it doesn't, if it just quickly drops back down, then I'm going to look for an entry over here. But if it does, then yeah, pulling the trigger from like 30 or 45, 465 or under makes sense. So this looks like it could set up like this. That's all she wrote. 1.36R on S&P. The exit right here. So, guys, go journal your trade. Go document, what you saw, how you processed it, what you felt, and that way you can make corrections on behaviors that served you, behaviors that didn't, and you just have it in the mind, fresh in the mind. All right, last thing, because I got to do it. I know some of y'all are here with me on the stock side of stuff. What happened with this? Invalid symbol. Okay. Pretty good drops across the board from everything. And here's one thing that you all can consider is right here. Look at where we're at with NVIDIA's drop. NVIDIA is now in a mitigation zone as well. So stock itself, this could mitigate out of this zone here. That can influence just the majority of it since it's weighted. For today, some nice drops on Intel. Pumps on Celsius, if anyone's still holding Celsius. We're up 3x on that. And then updates on solar, right? ENPH that we have here. It's looking good. Mellow day, nothing too crazy. Webull, big drop back down into this zone. So if you're looking to dollar cost average, add to positions, I do like Webull positions. Just anywhere under 14 for me is solid. So, and this is something that I'm just picking up at the right levels. But that's about it across the board. All right, so starting to see Dow start to move sideways, start to hold this level much better than it did down here. Clearly, there's much more demand at this area. So a dip back under 45,465. I like a buy position from here, and the risk reward looks like it can be pretty nice. So I'll share this here for today. $2.5R, not too shabby. It could go further, but I'm cool with this. I'll give 2 setups here. see. Here we go. Brandon, what you got? Oil. All right. Multiple people have that oil set up. Luis Lopez, what's good, man? Yeah, that's not how that works. Just drop the link next time over here. EU 1 minute. Sick. You're just here to flex. I get it. Luis, you're a beast. All right. What did I call this yesterday? Today's setups. All right. Just keep it congruent. Today's setups. August 29, 2025. Let's see. YM. What you got for us? Remember, if the setups are there, take your shots. If they're not, don't. Cool. So yeah, reminder, FTMO giveaway. Giving away FTMO to anyone who gets accepted into the program. Book the call here. The link is right there. Or just scan it here. So appreciate you guys. Join the free community on the left if you want that hands-on mentorship for the next year. 150 lessons on the psychology, building of systems, and the financial, like actual money management type of things. Working on exercises, you're doing worksheets, like it's in-depth work, and we get together 3 times a week for 90 minutes or so each session to engage and stay accountable with everything. So check it out, guys. Either way, much love. Shout out to everyone. Excited to see those of you that will be at the Traders Retreat in Colombia. Going to be a vibe. And appreciate everyone that's been picking up, the apparel that we got going on. So I hope you're enjoying all the free sessions that we have on here, and make sure you take advantage of all of the value that's in the community. It's all there just for you to take advantage of. So it's not about having lack of resources. It's about the quality of your resourcefulness, my friends. Make sure you journal your trades, make use of everything you did this week, because it's easy to forget. Much love, you guys. What do you think about Lyft? I'll drop a little update for sure. I'll drop a crypto update, and I'll drop a stocks update. So take care, guys. I'll drop a post, and I'm sure I'll send it through the newsletter too. Catch y'all on the next one.